Hi, this is Randy Finney with Right Side of the Chart, and this is a closing market wrap for Wednesday, November 5th, 2025. It is 4:20 p.m., so markets are closed. I was actually going to do a video tomorrow. I'd been just reviewing charts today, not doing a whole lot, but just answered a flurry of questions on the website from checking up on the comments, and kind of prompted me to just go ahead and do this now. And for another reason as well. As I go through this, here's what I'm going to do. I'm going to touch briefly on some of the commodities that I'm still liking. This isn't one of them. This is USO, but I'm going to give my thoughts there and how that might play into natural gas. The grains are still looking good. Wheat's broken out, corn, everything, soybeans moving. So I'll touch on those lightly. Then get to QQQ. Kind of keep my focus there. SPY is important. I'll talk about the gaps, everything that's been going on lately. And then the semiconductor. Somebody asked about the semis. And it's funny because earlier today, all the components of SOXX, the Phillips SOXX Semiconductor ETF. And I've updated those charts. I set a ton of price alerts. And I want to share that with you because that is very, very much that sector is very germane to what the broad markets do. This whole tech rally, the AI bubble, no sector has been more of a beneficiary than the semis, with broader tech being the second largest. All right, so here's USO. I'm just going to say what I said the other day. Somebody asked about this. Let me adjust this chart real quickly. Get down here. USO, from a weekly chart, you can see it best is in this just sideways slog here. And as I said, there's a midpoint line. It's a little bit below the midpoint of the price channel, but that's acts as support and resistance. If you break that midpoint, usually the next stop is the bottom of the channel once you trade below it. So if barring any unforeseen geopolitical events, anything that OPEC does, anything goes on in the Middle East, anything with Russian oil. My expectation is for most likely in the near term crude down, demand destruction. I don't have a strong enough opinion to bet it. The charts just haven't been clear, as I've told you. We did put in a divergent low on the 60-minute chart recently, but the daily chart just looks like a regular EKG. So, however, if that's the case, and whether it's not, we'll trade natural gas on its own technicals. I just wanted to reiterate that UNG is still pushing that level right there. Here, let me drop down to the 60-minute chart. I gave you an update today. So this is T1. It goes back from this breakout here, hit it there, hit it again, and a breakout above that level, about $14, would be bullish, most likely be the catalyst for a move up, and it could be pretty explosive. Especially, it will help. It's not an absolute necessity. Just like I always say, a falling dollar is not an absolute necessity to see gold rally. It's just something that helps it. So if crude were to fall, especially significantly, then that should give a net tailwind to natural gas. And the whole reason there is this crude prices drop down. They get below certain levels. They start capping wells, the less productive wells. Therefore, the supply of natural gas, which is coming out of the ground along with crude, when crude production, when they curtail it, it limits the supply or reduces the supply of natural gas out there. So either way, we'll take it on its own technicals. Just wanted to give you an update there. And then wheat continues to run after taking out that R1 level right there, coming up on R2, hit today. And from a longer term perspective, still looks good. Again, I've covered this quite a bit recently. You've got a primary downtrend line coming up here. But I still like that weekly chart that I've shared with you. I don't have it queued up on the long term, my multi-decade chart of wheat futures. All right, now let's go into the markets. So again, I was got a couple posts out to you and answered a few questions today. One of those on the site was a subscriber asked about the first question was from yesterday, and I answered that, and the reply was about these big moves in QQQ and NASDAQ futures. Let me grab that. And then the other part was about gaps. And absolutely, gaps right now, there's a ton of gaps. Remember, in a nutshell, my reply was this, and you can go through and catch up, go back to the last couple comments. There are a lot of gaps in QQQ lately. Volatility has, the VIX has woken up. It's perking up. It has, again, it's certainly had its biggest move in many, many months just a couple weeks ago, and it's still holding up. It's still holding above the primary uptrend line, and it's still elevated to where it was a few weeks ago. With that, with a rising VIX, it is indicative of increasing, volatility. So what happened here, you had VIX was low, even if the market's going up. And usually when the market's going up, low volatility and a rising market are kind of hand in hand. Correction, you tend to start to get, you can see volatility spikes during corrections. Then this was a very low grind here. But yet the VIX did not make new lows with the markets going to new highs. There was our sell signal, and you can see volatility has increased. So what I'm getting at here, expect these moves. I don't believe that they're drastic. Again, the question was put to me, I think it was a little bit of hyperbole, how the big crash down below or whatever the words were. It was just run-of-the-mill moves, in my opinion. Again, you can look at things such as average true range, which will tell you how much a stock is going up and down, or security in a day, or you can just look at QQQ. Right now, intraday price swings of, again, intraday from high to low of 2% are pretty much the norm. 1% or so, plus or minus off the lows and the highs. And again, traders love these gaps. There's a lot of them here. I'm highlighting all the gaps right now. This one, see, is kind of messy because it's in between all these reactions. So that one I wouldn't care about. There's a big, very obvious and blatant gap, and that's exactly what capped the market today. So one of the questions that I responded to is, T1 was taken out. Yeah, that was my max bounce target. That's what yesterday where we hit this level. And this morning I reiterated that, the bounce looks likely to be over soon, and maybe up to T1. And it carried a little bit above T1. But here's what in my reply, you can take a measuring tool, and that is a whopping 30 basis points right there. If you see the pop-up box, about a basis point is 1/100th of a percent. It was about 1/3 of a percent above T1, which is, again, close enough for government work, especially considering the government's in a shutdown right now. So to me, that's normal. Just like you had a little bit of an overshoot here, the futures went down even more and hit this gap. There's another gap right there. You can see I've added some lines here. So these are the big gaps. These are the obvious gaps. So blatant and obvious, a blind man can see them. And yes, to my reply, and that question, I think it was Kevin that brought up, absolutely. So I'll put a line here. We know that was, and again, the gaps technically are where you close and open. But when I get a spike like this, there's the highest point right after that gap occurred. So that's how I like to treat the gap right there. Again, instead of the actual open and close. That's the level traders are looking at. Plus you have that reaction low there. You have this gap right here, the top or bottom of that gap. There's a gap right there. So yeah, that was a logical place. And, shame on me for not having added that as a likely maybe a max bounce target. And look, guess what, guys? If we bounce again tomorrow and there's some more upside, this is where they're probably going to sell it. At least on the initial pop into, right? That's a big old gap right there. So if we get above there, now with all that being said, okay, so these are the gaps. Again, they're just very conducive to trading. Traders are just ping-ponging the Qs and the SPY right off these gaps. Right, you can almost bank on it when you have a good move. Better than 1% down, especially 2 on the day, and you're at those gaps. At least they're good for a reflexive bounce, and that's all that is. So let's measure it. So from that bounce off the 68-ish, 618-ish gap, you had about a 1.3% bounce. And now we close the day. The little white candles are the after-hour trades. We close back down on T1. So again, I just wanted to clarify that no, to me, I sometimes I think my subs and even myself will get spoiled on precision at times. Sometimes I can call reversals to the penny on a lot of things, but to me that's close enough. And again, you had a resistance level above. If it goes up and takes out that gap, you know what? We're probably going to punch it to new highs. That's my guess, just from getting up there. And if they backfill that gap and start to take it out, yeah, that's bullish. As of now, I just want to reiterate, nothing has changed on my near or longer term outlook. This is, by every metric, the definition of a downtrend line. what I called, again, in that reply, a very near-term downtrend. A near-term since that sell signal. Remember, this was our most recent sell signal. 5 targets we're giving for active traders. And again, active traders, this is a 15-minute chart. If you're a long-term swinger trend trader, daily and weekly charts are your charts. You're not going to try to game all these what I call micro squiggles and all these little bounces, but an active trader can do so, and that's it. So, if that was your max bounce target, you're not going to put a stop, 10 basis points above the whole trade if hit. And again, you're going to, probably reverse on a couple of these targets. It's about a 7% drop down to T5, but I've already said and just want to reiterate that if T5 is hit, it is likely going to change some things on the longer term daily and weekly charts. And then at that point, I won't be adding additional targets here. I'll be turning my focus to the daily, 60-minute at least, and or the daily and weekly charts based on where QQQ, what it's going to look like if that happens. I also annotated this chart up a little bit just to let you know that if on Friday, if we get a weekly, what this says is weekly BEC if Friday closed below 624.04. So the low of the week last week was 624.03. So as long as we hit 624.03 by Friday, and this is Friday's close right here, this blue line, that's what I'll be watching for. And I know at least one person's been very vocal about these bearish engulfing candles, and they either work or don't, but I've highlighted, and I've done this for years now, even decades on this site, where a lot of these do ultimately play out to be topping sticks and bottoming sticks. I like bullish engulfing candles just as much after a prolonged downtrend. So this is what I'm talking about. So this is last week's candle. You put the crosshairs on it. My pop-up box to the left shows you that the low was 624.03. And the low, there is no tail on that candle. It's so tiny you can hardly see it. Actually, technically speaking, the body is at 624.62. So I need to change that. That's all we need to take out, 624.62. So I'll make that correction. I'll do that later. Again, because that's how a bearish engulfing works. You have to engulf the body, i.e. the fat part of the previous candle. There's a little tiny tail below that candle right there. All right, so as of now we're there, but again, this doesn't matter. This means squat. It means less than 0 because it's Wednesday. We just finished Wednesday. 2 more days to trade. Again, it's not the be all end all, and it won't change anything other than just give you a little check mark. All right, let me move forward to the semis, but again, this is kind of it in a nutshell. Near term, we're over near term oversold. There's still a lot of froth in this market. The semis are still above trend. So yeah, they're going to step in and buy this, but the majority, if not all of the Mag 7 stocks have already peaked. And look, they're not way off. The only one of them I think is below the 200-day moving average as Meta. But either way, that's it. Take it, leave it. Just be aware that these are the gaps. And if and when we start to take out this uptrend line, this is where, because this is a big level. T2 comes in with right here. It was a previous all-time high. We had a sell signal there, a drop. I think we had 2 price targets there on a short-term trade. Then we hit it again, and there was a breakout to new all-time high. So this, anything down to T2 right here will be both this uptrend line on this little 15-minute chart here, this uptrend line, and the intersecting very nice price resistance of those previous highs. So that would simply be a back test of the breakout. And if you are bullish, and I know some on the side are, that's a 10 on a scale 1 to 10 if you want to buy a pullback, if you think the market's going to new highs. Otherwise, I suspect, again, with the semis I'll get to here in a second, if that breaks down, that's going to most likely usher in probably some more impulsive selling, probably a swift move down here to T4 and T5. All right, so just to recap the daily chart, this is the primary uptrend line off the April lows. That was our breakdown a few weeks ago with that bearish engulfing that didn't turn out to be the top. However, it was still very much a sell signal. Break of the purple trend line and the recent back test followed by the rollover or rejection with the secondary alternative, or what I call BOD, benefit of the doubt trend line that needs to go. That's also what's held QQQ the last few days. You can see 1, 2, 3, 4, 5, 6, 7, now 8 candles. And there's that breakout right there I just showed you on the 15-minute chart around 614. So this is a big level to me. If it breaks, we're probably going to run at the 50. That's the yellow line, the 50-day moving average. And on the daily, the next stop would be here about 589. Okie doke. Let's run to the semis. I'll try to go through this pretty quick. All right. Pardon, this is a little busy. I can probably take off some of these old lines and clean this chart up. As I said, I was planning to do this video tomorrow. And then the fact that I started to reply to some of these questions regarding both the semis and the market prompted me to do this now. So this is your primary uptrend line right here. This is the big boy, right? This is comparable to the one that QQQ was already broke down a few weeks ago. It was on this day, but this is the April low. You can see this is the only trend line. This was just a minor trend line here. On the same day, it was broken, but again, not a primary. This is the primary, has more points, comes off a much longer, further back period. This was a secondary uptrend line. So you had the sell signal just like QQQ back there on that big red candle. Then you back tested a couple times, rejected, back tested again, rejected again. And now, so let's make it nice and bright. All right, we'll remember this is yellow. No, we'll make it, let's play around this blue color shows well on the black charts. And I believe I already have an alert set. I went through today and set a lot of alerts. So the takeaway, guys, I did this a few weeks ago. In fact, right here, leading up to this. And that was the biggest drop in many months. And in the days to weeks leading up to that, I was doing these videos, setting a lot of price alerts and telling you, be aware, there'll be a day and they're going to start going off like popcorn. And when that happens, you want to check those charts. Was it just a pre-opening? If the market opens, sometimes it gaps down and they buy up the gap immediately within the first half hour. You might not want to jump the gun. But if you look in the majority of the market-leading tech stocks, QQQ, SPY, the semis. In this case, we're going to focus on the semis because that's been really the last pillar. I think will be the one it's been the strongest sector, and I think it's the one that will probably take the entire market down with it, most likely. And so my reply in the post, somebody asked about, does it factor into the market? Absolutely. But we're still above trend. And so set that alert on SOXX. That's one of several semiconductor ETFs. One of the big ones I like to track. I follow all three, XSD and SMH as well. Those are the other two I follow that track. They're just different ETFs with different makeups. But this one tracks the SOXX Semiconductor Sector ETF, which has been around forever. You can go to SOXX. Every chart's different. Some they use different tickers. But the PHLX is the original semiconductor sector. And you can go back into the 90s on that one. And if I turn on all my lines here, you can see this is our primary secular bull market off the '08 low uptrend line right there. And so this is the divergence. It just continues to build. And again, we had divergence with that last point. And it's not as if it didn't play out for a correction. It was a 46% drop. Let me repeat that. I use log scaling. This sector got cut in almost half right there. It doesn't look like it because I use log scaling. In my opinion, that's the only way to go. Do not use arithmetic or linear scaling on a chart that ranges from a price point of about 175 at the bottom to 7,200 right now, right? This is going to put everything and equalize the moves in percentage terms, not point terms. All right, so yes, that divergent high absolutely played out. And it was, again, I always say divergence is not a sell signal or a buy signal. If it's bullish divergence, it's a condition. There was your sell signal. There was a drop. Where did it end? At the April lows, where everything else did, cover shorts for all the reasons. And it was technically induced as well. And I can't tell you how many times I see that moves like this end and coincide it was really, I guess there was a news event at that time. We started covering up in anticipation that I told you Trump would cow down long before the word taco, the acronym taco, Trump always chickens out, came out. That was the fundamental catalyst. But again, there was a technical catalyst, and I haven't tweaked or touched this trend line in a while. It's just the monster trend line. When that happens, when that breaks, that's going to be a secular bull market trend line break, and there's going to be massive amounts of profits made shorting the semis when that happens. I'll give you one other level I see right here. It's probably a target. So this divergence that was in place has not, it didn't reset. It's grown larger. So it happened. There was a correction, very tradable correction, both to on the downside and then to reverse up off that support on the long side. And then this trend line is basically just a breakdown and a back test of it. So if you want to know bigger picture, where do the semis go in the coming over the next year or so? Probably a minimum to that trend line. If you're a forever bull, believe the market will go up forever and we won't see any more big recessions or the Fed will always come and save the day, that's your buy point right there. It might take a while to get there, but every so often you come in and check it. That's part of a secular bull market uptrend line. God help us when it breaks, unless you are adept and comfortable with shorting. And then very near term, here's that trend line I just gave you on the daily right there. So that needs to break. All the better if you want to increase your odds and minimize a chance of shorting it. If it proven to be a whipsaw, wait for a weekly close below it. But the problem with that, it can be a problem, is by the time you get a weekly close, you can be way down here. And so anyways, that's the bigger picture. Let's drill into the components and I'll wrap this video up. And again, as I do this, that's just the sector. I didn't have it. I showed you the ETF. The ETF tracks the sector. There's your uptrend line, nice and clean. I'll set it, but it's going to trigger the same day that SOXX triggers. So we'll go back to the ETF. And as I like to do, to the right here, I loads all the components of an ETF or a sector. And so I have them sorted by market cap. Just put that a little mental side note that when I go through these, the biggest ones matter the most. They're not necessarily, usually they are, but in the sector ETFs, they're not necessarily the biggest components, but they're a larger company, and so it has usually a bigger impact on the market. When I cover the NASDAQ 100 and the S&P 500, those are market cap weighted indexes, so they do have the highest weighting on the top components. So we know NVIDIA is the lead dog here by far. I mean, NVIDIA is the market. When NVIDIA dies, I would struggle to find a bull in the world out there, even the most ardent bull, that's going to say that if NVIDIA drops 40-50%, that somehow the stock market's going to hold off and pass the baton to someone else. At some point in the future, competition's going to catch up. You think the Chinese are laying idle right now with our ban on NVIDIA chip, not coming up with the next generation of chips that are most likely going to make a lot of NVIDIA's chips obsolete. You can bet your bottom dollar they are. Either way, this is what it looks like. Divergence, big divergent high, just like we had a divergent high there. That divergent high, again, it's good for a 40-something% drop. And right now, I don't have a very strong read on it. I could see here I imagine there's some kind of candlestick pattern, I can't recall, with two little dojis like that right there. And we had a little bit of price support here. I noticed the other day I put this line here. You can see we had a gap right there. That gap was backfilled on 2 different days. Then we broke below it, couldn't get there, and we've been rejected off that level. So this is a near-term bullish if they take it out level, bearish if they can't. And then really nothing big happens on NVIDIA until this uptrend line. And you can see this yellow line below it. That's the 50-day moving average. They like to buy the 50 on a lot of these tech stocks. NVIDIA is going to report here. It's still going to be about another little less than 2 weeks, around the 19th or so. So keep that in mind. Probably not going to see any big fireworks unless the market breaks down and drags it down before then. Which is certainly possible, but otherwise. And I'm going to put a line right here. I just noticed, always look at these previous reaction highs, 1, 2, take that across. So that's your next near-term level. Broadcom, number 2, Broadcom's going to report on December. You can see a nice clean. Again, I believe it can't hurt to have duplicate alerts. I'm going to set it there. I'm going to encourage you to do the same. And the takeaway is, if you're sitting at your desk or you're out and about, maybe you don't do this full time, but and you get mobile alerts or email alerts or whatever from your chart provider, and you start getting one after another, not just a random one here or there, but multiple alerts, that's when you want to engage quickly, because when this sector breaks down, I can promise you it's going to spill over to QQQ, and that will spill over to the S&P 500 in the broad market. I'm going to take this line here. Well, I'm going to add a line right there since this is still number 2. When I get down to the lower components, I won't spend so much time. So you have you have a big old gap right here, right? And then this is a recent low. Like a lot of these stocks, see it walking up the 50, that yellow line, 50-day exponential moving average. See what happened back here was floundering. It took out the 50s, tried to back test, couldn't do it. From that point, even if you missed the back test, you had a chance even if you missed the breakdown right here at my crosshairs, you had an opportunity to short the back test, because we went down for a couple days below it, back tested. They were at the same level. And from there, Broadcom still had another 37% to go. So again, guys, it's a technical level. Both man and machine will act on, most likely. So you can also set price alerts that way as well. You can set alert on this one. You have to go and set a price alert on a moving average. They'll let you do that on most platforms, including this one. So that's it. So I have that trend line there, and that trend line, if taken out, then I'm going to look at the 50, and when the 50 goes here, I'll even set a second alert for that 324.40, because if that goes, the 50s will be taken out as well. So those are the alerts I'm looking for, and if I get them tomorrow, great. If I get them 3-6 months from now, great. So be it. That's when the semis buckle, and until the semis buckle, the stock market's only going to go so low. We might not even hit my 5th target on that little 15-minute chart if that doesn't happen. Next one up, Taiwan Semi, also a big one. Put in a divergent high here. We had a big sell signal there on that minor trend line break. You can see we had a minor uptrend line, big red candle through there. We've been moving sideways, put in another equal and still divergent high, because you can see here, I have to update that. We had divergence at this high. We broke down, back tested, and we're moving sideways. Equal high with lower highs on the indicators makes that still a divergent high. A little minor trend line there that probably will do the trick if popped. But then here's your primary uptrend line off the lows, and they come in roughly together. I don't have a whole lot stopping Taiwan Semi until you get down here to about 258. From where we break down, roughly from where we are, it would be about a 11-12% drop. And then maybe continue. It's more of a support zone that runs down to about a 15% drop. Here at that's 247.75 right there, give or take. AMD just recently broke down a little. I'm not crazy about this trend line. There's enough reactions to make it valid. This is your primary trend line there. That's a big one. And it's got a lot of cushion down to it. And the other thing about these, it's just like your 200-day moving averages on every stock, or any key moving averages. You can only get so far. Think of it like a rubber band. You stretch it, you get too far above your 200s. Even in the strongest bull market, you're going to come back and visit the 200s. You're going to come back and visit the 200s, and they're going to buy it, right? And ultimately, sometimes you're going to lose the 200s. That starts a bear trend, bear market. Once we lost the 200s here, it was a drop of about 50% in this stock. Tried to recover them here for about a week or so. Couldn't do it. Once it failed and it was clear to the masses it failed, the bottom fell out of the stock, right? Now, you can see we are insanely, this is nosebleed territory above the 200s. I even have an indicator I keep on my chart right here, percentage above the 200s. This is it's percentage. So when you see here 58.21, 0.19, because we're trading after market right now, it means we're 58% above the 200-day moving average. So if I put a horizontal line there to show you, this is how high we recently got. which was a little higher. We're just a hair under that 60, what was that, 68, almost 69%. I'm rolling back as far as I can go here on this daily chart, and you can see this is the most overbought by that metric it's got. So mean reversions are a bitch if you're long a stock or short a stock and it goes, in the other way in a bear market, and it's going to revert back. And even in a bear market, these stocks will come and back test their 200. So I wanted to bring that up because there's a lot of thin air. But guess what? When these stocks get insanely ahead of themselves, the mean reversion is vicious. You can drop fast. And that's usually the case. You're going to come back in and fall a lot faster than it took to get up to that point, usually, most cases. And so that's it. So, and there's a trend line right there above it as well, which is a likely target and a massive old gap traders will be looking at. So, yeah, this is where they'll buy it first, right here, bounce it, and then that gets taken out, and then they go down to the 200s. ASML, divergent high, uptrend line right here off the lows. This was the initial trend line we broke down, and just like the markets broke down a few weeks ago, had a little kickback rally, and those secondary trend lines came into play here, BOD, benefit of the doubt trend lines. And so this one just broke down. The thing about it, when we had this peak right here in that trend line break, there was no divergence. We did not have any negative divergence. It's not a must, but I really like to see it. It sets the stage for a much bigger drop. Trend line breaks without divergence are usually good for a quick correction. Now we have a divergent high. Not to say that it can't go higher, because divergence is not a sell signal, it is condition. So if this one wants to wedge higher or go higher, but the thing about that is it's already taken out that trend line, so it's already on a sell signal, and that's why I don't think it will. So that one already broke down. I don't need to set a price alert for it. MU, nice, clean, steep uptrend line, set an alert. Bearish rising wedge, one of my favorite patterns right there. Clean uptrend line, your divergence line forms a wedge with the indicators making lower highs. And so a little alert there. And when this one breaks, that's Micron. I don't see anything stopping the stock, any big counter trend rallies until right here. It's going to drop, in my opinion, from where it is now. Come down to the trend line. I'll give you a little hiccup around, maybe around this level. So again, it depends if and when they break down and how far up, if it goes any further. But if from right where it is now, that's going to be about a 20% drop to the uptrend line right there. And that's going to take the stock market down with it, guys. That's why I'm doing this, whether you care to engage the semis or not. LRCX, Slam Research, there's your current uptrend line. This is divergence, so just borrow you, put you right here. A little divergence forming right there. Qualcomm, messy, sloppy chart. I don't have a strong opinion. I don't like to force trend lines or anything like that. I had one there. I'll just extend it out. It's broken, but a lot of these are just these big earnings moves here, or pre-earnings moves or whatever. A lot been going on with this current administration announcing support and partnerships and taking stakes in these semis. It's just been a stick. That's why I haven't been covering the semis much lately. It's just been an area to kind of stay clear from. But now, again, as I went over these charts today, there's a lot there, and I think this is timely. So I like to get this out to you, because the last thing I want to do is I'll be home. I'll be at my desk all day tomorrow, but I would, God forbid, I'm out for a while, and all of a sudden these break down, and then there's the semis are down 5% in a day, big move, and just a start, and we miss it. So I give you these levels in advance, and if they don't break down, they walk up a longer. Maybe I'll adjust or tweak the trend lines, but as of now, they're pretty solid. And again, birds of a feather flock together. So when I go through the sector, if I saw just one or two sitting on trend line support, sitting on the edge of a bearish rising wedge that looked ripe for a breakdown, by that I mean where they're at in the proximity of the wedges. If it was just one or two out of the, what am I covering here, 30 stocks, 30 components, I wouldn't bother. I might share that as an individual setup. But again, I like to see confirmation on the sector. But when I see all of these in close proximity where we could see multiple breakdowns. And if you get 5 or more of these breaking down in a day, the more the better. And those breakdowns stick, then those are likely very advantageous short entries on a lot of these stocks if that happens. And again, the takeaway is also on the sector as well. I mean, on the broad market. There's another one, ARM. There's a nice clean up trend line. Most of these trend lines, you can see my charts. If you can't, just pause the video, zoom in, whatever. But most of them come off the April lows, and some are better defined than others. And that's it. So a lot of these the uptrend off the April lows on a lot of stocks look like Fibonacci fan lines. If you're not familiar with what those are, let me find a clean board. You can draw those fib fan lines like this. And, they'll show you walk up one, then you break it, you bounce off the next one, then that's support, break down, back test the first fib fan line, hit the second one, wrote it up, break down, back test. Then we took out the next one with a gap, went down through there. One day we hit it and then took out the last one. So again, I'm looking at, these are just hand-drawn trend lines. And this is the current one. And it has a lot of nice, clean reactions. And so that's also a divergent high right here. And so no sell signal on this one. In fact, there are a few sell signals as I've gone through these charts so far, but on the majority, we're still above trend. And so that's, and again, some of these happen very fast when these trend lines go. So and that's typical. And that's, again, why I like to do these videos. I can convey my thoughts a lot more. When you have these hot, nearly vertical trends and rips, the reversals can come fast and furious, just like what happened in silver recently. So if you wait just a day, 2-3 days later, and you ask me right here, Randy, is it too late to short, ARM or the semis? I'm going to say, I wouldn't do it. I don't, because then you get in you start shorting. I like objective shorts early on. I'd rather get stopped out than miss in short halfway down and then right before the first counter trend bounce. So you got to be ready. And again, price alerts help you with that. You don't even have to be watching this sector that day. It might be tomorrow or 3 months from now. All of a sudden, bing, 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 bing. Alerts going off, and you want to engage that sector and you want to get in there quick. All right, this is Intel. All I can tell you, big divergent high. This was one of my favorite. In fact, my only semi I love back here on the long-term support. We went long 1, 2, 3 times that one. Wish I tucked it away after that last one. But this was all when the government started stepping in and putting their hands in there and supporting them in many fashions, including and not limited to taking a stake in them. But either way, there's a divergent high. There's a trend line there. I don't have any desire to really personally or individually short a stock that the government's got a heavy hand in. KLAC, there's a little minor trend line, just broke down and back testing right now. So that one did break down on a sell signal. So we don't need another sell signal. If the rest of the alerts fire off tomorrow or next week, I'd like to see this one still below that trend line. That would certainly help. Texas Instruments, one of the better looking ones, but again, birds of a feather. So I'll share it. If you're looking for longs in the semiconductor sector, I wouldn't buy this sector right now with your money, and I mean that literally. But if you're looking for one, it's support-ish. I think that's longer-term support, positive divergence. So there it is. So again, but probably fall with the rest of the sector if the sector does break down soon. Divergent high on ADI, nice clean uptrend line off those April lows. Breakdown, this one's already started its thing, but they're doing what they do, and that is buying the 200, buy the 200, buy the 200s, buy the 200s in a bull trend. Once the 200s get taken out, so that's where your sell signal will be. I'll have to set up a price alert for 200, and on that I use the I like to use the last of the two. They've been buying the 200 exponential so far, but sometimes they'll buy the 200 simple. And that, which I often say, is why I have both the 200-day exponential and 200-day simple on my chart. Because some traders use one, other traders use the other one. Therefore, to be safe, you want to give it the benefit of the doubt and wait for the last of the two to break. But if you're looking to buy the stock, if you're a bull, or just a flexible trader like I am. You want to buy corrections back to a, you want to buy the first one because you don't want to miss it and say, oh, well, I'll just wait till they hits the 200 simple. Well, you miss all those opportunities. So you buy there, and then your stop is a little bit below. You can leave a little dry powder if you want to add to the 200 simple, or you wait till the 200s are taken out, and then this one has likely started a new downtrend. Marvel, divergent high. Here's your cleanup trend line right here. This one does not come off the April lows. It comes off the early September lows right there. So this is your divergence line right here. Actually, this one right here. There's your divergence on the RSI. We had it forming on the PPO for a while. Needs to take out this trend line. And then, of course, you do have the 200s below. So maybe you're just looking to trade a correction. Trade these guys back to the 200s or any other primary trend lines they might have down below that. And I'll just add that one there because that'll probably come into play at some point. NXPI, divergent high, sell signal on the trend line break at price support, next price support, and one after that, one after that. MPWR just recently broke down on earnings, breakdown below the uptrend line. This is your primary uptrend line, nice and clean, off the April lows like so many. There's our divergence line right there. Just like, all these stocks, if you look at my charts, you had the bullish divergence into the April lows. One of many reasons we're covering shorts and going long there. And this is a divergent high, just like that was a divergent high right there. And remember, that wasn't a sell signal because we had a divergent high there. We had a correction. We had a divergent high here, and we had a correction. What was different about this divergent high? Well, once we broke the primary uptrend line, that's all she wrote. And this stock from there fell until it put in a divergent low, 52%. MCHP flirting with its 200s right now. So again, on a lot of these guys that I'm highlighting, you might want to set price alerts on their 200-day moving averages. And, sometimes you get little pierces below there and then they buy them back up. So once you start looking at this sector and doing what I'm doing, go through these components, and you see the majority of these stocks losing their 200s, that means we're no longer in correction mode. You're probably in a bear market, early-ish mid to stage bear market action with plenty more downside to go once the 200s clearly are taken out, right? This one, once it lost the 200s, had a 61% drop. ALAB, Stera Labs. This is my uptrend line off the April lows. And on a breakdown, back test, so that one already broke down. It had a wedge break here. First, there was our divergent high, just like this divergent high here with the sell signal. That one broke. That was a minor trend line right there. Hit the primary uptrend line, breakdown, back test, and they came a near gap backfill. And since they came so close, that to me has been checked. Remember, the traders love these gaps. We didn't make, and I always say this, if you're targeting the gap at 144.88, you do not set your buy to cover order on a short at 144.88. You set it a little bit above that. A little bit's going to be relative to how volatile the stock is. So that's about exactly, I didn't short this one, but that's about where I would have covered, somewhere in there, because all eyes are on that. So what are they going to do? The buyers are going to step in early, or short sellers like me are going to cover early as well. Now, we already had that bounce. So if we get a rejection here, and it's also, look what it's doing as well, guys, back testing that 50. Here's the 50. Took it out right here. Took it out there. Bear market, right? Took out, lost the 50. It was riding it up like a world champ. Took it out. What did they do? Rallied back to it, rejected. Boom. From there, if you missed the breakdown, the initial breakdown, you had an opportunity or a gift to short it on the kickback to the 50. You made 57% if you rode it to that low there. Then, if you bought the breakout of the 50, the recovery here, you made, again, hypothetically, if you milked it to the high, 270%. Now, what happened here? Trend change. When they took back the 50, they bought it, 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 they bought it. They bought it. Uh-oh, gap down below it. And now tried to recover it. We're right on it today. So I'm not going to call this one yet, but that to me, when you're below it, that's a back test. And so if it starts to move away from there, then you know that they rejected it off the 50, and it's probably going to be something just like this back here, in my opinion. So a lot of milk or meat left on that bone to shear off. 144 has already been checked. 200s are below it. That's another level that, you know, bearish when taken out. But again, this one breakdown back test and a back test of the 50s. If SOXX wasn't right above its primary trend line now, in the majority of the big names that I already covered, I would probably short this stock right here. But I'd rather be the second mouse in this situation. You know, I have the QQQ shorts right now. So, but I will get more aggressively short, and I will start to engage this sector absolutely when I get the sell signals that I've already covered in this video. CRDO, Credo, beautiful chart here. Look at this. You know, again, a lot of these guys, this is divergent high right here, drop. Divergent low, positive AK bullish divergence, uptrend off that low, off that divergent low, nice, clean. And now this is a divergent high. No different than this divergent high here, and which was followed by a sell signal when the trend line and the 50 days got taken out, 50-day moving average. So you already had a breakdown here. They bought the 50s and price support. They just recently back tested, followed by a rejection. So now you need to take out this level here. I'm going to put a little price alert right there. And that will open the door to my next target, 103.11, which again, if let's say you wanted to take this one here, that's going to be a 39% drop. They're going to buy it there most likely, unless the sector itself is not at support or bouncing, but most likely it will be, and they'll buy it because it comes in with the 200-day moving averages. After that level goes, which I suspect it will come down here to the next target, $86. So that's, and then ultimately maybe quite a bit more. We'll see. As of now, let's just say that's my current final target, 50% drop. TER, Teradyne, way up the uptrend line and off the uptrend line. Here's your primary uptrend line right there. Comes in with the 200. See the 200 red line exponential, 200 simple. This is a stock that's just gotten really far away from its 200s like it did right here. Last time it did. Again, if you might be the most uber bull in the world, but you got to acknowledge this stock is insanely overbought. And the last time it got that far away from its 200s, or even it's even farther now, it corrected 30, it lost a third of its value right there. That's over a 32% drop to come in and drop back to the 200-day simple moving average right there. Then it bounced. They bought it again. Then it lost, started to wobble here. They tried to recover, couldn't hold. Once the 200s were gone for good, and you could clearly see they were below, they backed as they sold it right in the rally into the 200 exponential, and it had another 46% downside to go. So again, you may be uber bull, but if you're doing this, you know, unless you're just, I don't know what some people are thinking, but all I can tell you is at best you want to wait for a pullback, in my opinion. If you think the stock's got a lot more upside to run in the coming years or over the next year or so, wait for a pullback to the 200s and that uptrend line. It's going to be about a 32% drop. That'd be a whole lot better place to buy it. You know, I might be buying it there. I ain't buying the stock right here. No way, not me. STM already broke down here. Put in a divergent high just like it did there. Took out the trend line right here. It's been stair-stepping lower. It's on the 2347 support. So that one's already taken, and it's taken out its 200s as well. So this one's done, I think. No need to set an alert. It's already broke down. ON on semiconductor. Positive divergence, if you're looking for one that could bounce, that remember, in a bear market, I always said, I've been saying lately, the road to a bottom of a bear market is paved with positive divergences. So you're going to get them, just like here's one I marked here and didn't do squat because you were below the 200s. So there was a divergence that didn't pan out. And you can see here, this thing's just been riding its 200-day moving averages down since it lost them right here. It was in a bull market, buying the 200s, then it lost them. Sell the 200s, sell the 200s, sell. Rah. Tried to take out the 200s, tried it again there, but so far tell you it's right on it right now. So this one's anybody's game. So all I would say, there's better fish to fry. If it loses this level, then it's done. 46.36, that's where I have that line right there, about call it $46, because after that, you're going to have clearly started walking away, and you'll see a clear rejection off the 200s. And, there's this little inverse head and shoulders pattern that broke out from there, and that's what carried it up there and took it past the 200s. But you can also see it's below its primary downtrend line. That's a key level right here too, guys, on that one if you're trading it. UMC, messy chart, sloppy. I'm not even going to talk on that one. ENTG, trend line here, also kind of a sloppyish chart. I don't have a strong opinion on it. ASX gone parabolic. Parabolic uptrends don't end well. Usually prove to be blow off tops. This is the best uptrend line, the only uptrend line I have on it right there. So let me remove that line. It's taken out its divergence, so I'm just going to take these off. And again, these are small ones now, guys. I'm on the bottom of the barrel here. I'm almost done. I started out with NVIDIA, which is a $4.8 trillion company. The second largest I covered was Broadcom. It's $1.7 trillion. Taiwan Semi 1.5, and then they drop off quickly. The fourth largest was AMD at $405 billion. You can see my market cap right here to the right. So now we're on, what did I just cover? This little guy is $13 billion. That's still, big company, but it's dwarfed by the other ones there. And it's not going to move the needle as much. This is SWKS Skyworks, sloppy chart. But again, it shows you that you're either NVIDIA or a handful of the other guys that are beneficiary of this AI boom, or you're not. These other stocks are clearly in a bear market. And they're, some of them are trying to recover the 200s, and they get above them for a little while, and they can't hold them, and then the bear market resumes. So that's what I see on this one. Rambus, RMBS, let me turn on my lines, update that one. I guess I didn't update there. Nice little divergent high right here, clear divergence, but no sell signal. There's your uptrend line, and it's also walking up that 50 as well, 50-day moving average. So again, on a lot of these, and I look at the 50. If you see a stock trading through the 50 or trading through any moving averages, 200s, like they're not even there, especially recently. So I put a higher weighting on what's the history of how does that stock behave off a certain moving average. Like it did very well in the 50 there, did well in the 200s here. And then overall, and then more recently, that makes even a better weighting. Traders are going to zero in on this stock and a lot of the others I showed you above their 50 days. And so set a bunch of price alerts on those, and that's the best way to tell you with confidence if a breakdown is going to stick or if it's just a correction, because you want to buy pullbacks to the 50s until it stops working. Divergent high, that one. Sorry, that was MTSI, and yeah, divergent high. There's your trend line, and the last one, NVMI Nova Limited. I did not mark this. I didn't get that low. Again, these are the lower tier stocks. They really don't move the needle that much. But in case anyone's interested in trading these or any others, just drop me a line. I'm marking it up. This is what I do. See these levels. See two reaction highs here. A breakout to new highs. So failure back below that level means this breakout to all-time highs is a failed breakout. That's bearish. Plus, you'll also have taken out the uptrend line. Then you've got the 200s just below that. And before all said and done, I think the stock within the next 6 to 12 months will be down here, 52% drop. All right, I'm going to wrap it up here. This has been Randy Finney with Right Side of the Chart, and have a great day.